Share Shootout brought to you by Lion of Africa Insurance, insuring South Africa's future.
Welcome to your Tuesday evening edition of Share Picking Fisticuffs. I'm Bruce Whitfield. You're watching CNBC Africa, first in business worldwide. Coming up on Share Shootout tonight, the most vicious stock picking show on TV, where I am judge, jury and executioner, and occasionally also do like to set people on fire. Now, why does a protea choke? How do polystyrene makers ship their products safely from place to place? And is it possible to be a claustrophobic? We don't know the answer to any of these questions. What we do have is another battle of the wits. We introduced the champion with a perfect record of 1 win, no loss. Lance, I grew up on Mum's Nougat Williams. If you didn't watch last week, it's Sally Williams Nougat. Look at the fine figure of a man he is. It shows it's good diet food. His challenger has also had one appearance, but is disputing his ignominious defeat. Nick, I'm still holding a grudge. Norman Smith is in the blue corner this evening. Not that we have corners, we just make that stuff up. Over the next 30 minutes, both of our stock pickers fight it out for the title of Share Shootout King, and the loser has to help Julius Malema's political movement with branding and strategy. So nobody really wants to lose this evening, do they? No, they don't. Both have pre-picked shares and will keep them close to their chests. Neither knows what the other holds. At some point during proceedings, they must accept at least one of their competitors' stocks. And the longer they leave it, the more likely they are to have to accept something they really don't like. Each has got 30 seconds to argue their stock pick. We'll let the Share Shootout begin. Because it's been so long since you graced us with your presence, Nic-Norman Smith, I'm going to be nice for once, and this is the last time I get to be nice, incidentally. You can go second. Because Lance Williams from iCapital, I am terribly interested in knowing, in the next 30 seconds, why you think, in a beleaguered banking sector, Standard Bank is worth a punt. 30 seconds start now.
Thanks. Standard Bank is a well-established South African bank. It's recently changed focus from ambitions on being an emerging market bank to a Pan-African bank. I believe the strategy is starting to pay off. They've also focused strongly on cost containment, with a lot of work done on the international operations specifically. If they get their Africa strategy right, I think it will show good growth, and that's really where I think the growth will come from and the opportunity.
Your 30 seconds are up. Here's a South African bank with a strong African footprint. They've had this African footprint since the days of Conrad Strauss when he ran Standard Bank in the 1980s. He was the first guy to make these moves into other parts of the African continent. Here is Standard Bank. It has got the legacy of Jacko Marie. It's now got 2 chief executives, Sim Chabalala and Ben Kruger. It's paying 2 CEO salaries, probably covered by the fact that they just sacked 148 IT people over the last week as well to make up for it. I'm not convinced that banks are the place to be for the next 2 or 3 years, Nic-Norman Smith. What about you?
And they've just built a really fancy, nice new building in Rosebank.
It's the kiss of death. The kiss of death is a new head office, absolutely. But what is your sense on banks?
It depends which one. I have to say this is. I'm going to go out on a limb because this is one that we like as well. I think that Standard Bank was the poster African growth story for a number of years, and it was priced like that as well. It's now come off, and the business has actually grown, and they've been cutting some costs and right sizing and sorting things out. So there is quite a lot of upside potential in Africa. The concern is obviously with all local South African banks is the exposure to the South African consumer and South African economy. If we see a prolonged downturn in consumer spending and in the housing market, that would clearly impact all of them.
And Standard Bank has been very aggressive in unsecured lending, not so much in the personal loan space, but they have used credit cards as micro-lending devices. High-risk, unsecured lending strategy, massively profitable, of course, provided people keep paying off the minimum balance on their credit cards. Plus, then they've got this additional Africa exposure, which is huge potential upside, but considerable risk. And we've seen what's happened with currency volatility of the different currencies, the jurisdictions that they work in. And also, we have seen the huge amount of pressure that comes to bear with managing multiple jurisdictions. Is it really, at this point in the cycle, a good idea to spend 107, 108 Rand a share on Standard Bank?
I believe it is. I think South Africa is the one place that is still growing strongly. There's a lot of interest in the African continent from offshore, and I think the business banking side is where Standard Bank are looking to capitalize strongly. They've got a lot of experience in Africa, vast experience, been there for a long time, and those businesses are starting to get traction.
ABSA has nicked Kennedy Bungani and Bond, James Bond, the other Bond, Craig Bond. They've nicked some of the top brains in Standard Bank to go across to ABSA to do exactly the same.
Yes.
This is a massively competitive space. First Rand keeps sniffing around for acquisitions. This isn't a blank check, if we still issue checks, a blank check for Standard Bank on the African continent, though.
No, certainly it isn't. Standard Bank have a deep management pool. They're very good at nurturing management internally. So I think the transition with the management has gone fairly well at Standard Bank. The African continent has enough space for everyone to participate.
Okay.
South Africa have got a...
I'm going to cut you there because it's time for Nic-Norman Smith to see whether or not he thinks it's a good idea, a bad idea, whether or not he wants to play a little bit of poker with the next 2 picks, potentially. I wouldn't hold that too long. Do you like Standard Bank enough to say, I'll nail my colours to the Standard Bank mast?
Yeah, it's reasonably priced. It's not super cheap. It's not super expensive. It's got some nice African upside. They've invested a lot of money there. So, they've got some decent assets in the ground. And
the dividend yield right now is actually surprisingly good, considering the shares come off quite nicely. I say that from a buyer's perspective, of course. They've got a dividend yield of nearly 4%. That's more than you'll get on a cash deposit in the Bloomin' Bank. That's pretty solid.
And it seems to, from a behavioural perspective, it seems that people have kind of forgot about it to a large extent. It was one that you had to have in your portfolio just a few years ago. Now people, their first rands...
You accept it?
Yeah, I accept it.
You accept it. You see, when people have been away from the show for a nice time, they come back nice in the beginning. Well, let's see how nice you're going to be, Nic-Norman Smith, with your first pick this evening, because here you've got a very adventurous pick, the 16 billion rand company that owns, amongst other assets, some gambling stuff. It also owns ETV, Hoskin Consolidated Investments, HCI, run by communists, or at least former communists before they saw the light. 30 seconds on why you like HCI.
Yeah, it's a very it's an investment holding company. Major asset is Soho Sun, which owns hotels and casinos. Two great businesses, as you mentioned, ETV. It's also got a number of other smaller businesses, some of which it's spun out into Nivius, which is a listed holding, and they've got investments in Australia, in Europe, or in the US, and a number of other places. If you take the valuation of Soho Sun alone, the listed valuation, and the other listed entities, you're basically getting the remaining assets on a multiple of around 3 times. So very attractively priced.
Very attractively priced. It's not a dividend payer. They retain cash for acquisitions for growth. Is HCI one that you could stomach, Lance?
No, I think the direct investment into the underlying good investments you can get, and that most probably counters the attractiveness of HCI, and that's most probably a reason why the rest is the rump is so cheap, because you get this discount, the holding company discount, and I think that will most probably remain. So that's the difficulty with it. I think they have got a good portfolio of assets. It's most probably gone through a very strong growth phase. I think they now having to manage their multiple assets, which is proving a little bit difficult, and they are trying to move assets around to extract further value from them, and we'll have to see if that works.
A response to that, Nick?
Well, that's the exact point, and they've been successful already. So there is a lot of value trapped under there. So at the moment, you can buy that at a discount. What they've done already is they've spun out some gambling assets in Nivius. You've seen tremendous share price growth in Nivius, so clearly the market is recognizing that value. They're talking about reversing ETV into Cedal, so they'll effectively be listing ETV, and then who knows what's next. So the point is, management have shown recently that they are interested in unlocking that value.
It's a compelling argument. It's a compelling argument. Is it one that is going to sway you, though?
No, I think there are better opportunities, and I'll take my chances with maybe Nick's other 2 picks.
So you're shooting it down?
I'm shooting this one down.
Now, Lance Williams, you shot down Nic-Norman Smith's Hoskin Consolidated Investments pick. The name's too long. That's why I don't like it. HCI. You don't like it. You shot it down. That's why I'm interested, because, again, it's not an issue that you have with holding companies. You don't mind the holding company structure. In fact, you like the holding company structure so much that your next pick is a holding company. REMGRO. In 30 seconds, why?
REMGRO is a high-quality investment vehicle which gives an investor an entry point into a number of domestic South African companies. Their biggest holding is in financial services in RMH, First Rand, and Rand Merchant Insurance Holdings. The next is in Mediclinic, which is a private hospital group operating in the UAE, South Africa, and Switzerland. They've also got Distal and Rainbow. They've put a lot of their spare cash to work recently. They trade at a discount to NAV about 10%, And management have
Okay, now there we go. He's in full flight, but we cut him short. He's learning the rules of the game. Okay, now, a very wise guy, about a minute ago, was criticizing the whole holding company structure idea and was saying you can get the underlying assets for cheaper elsewhere. What happens if I don't want Mediclinic? Well, I can go and buy RMH or RMI or First Rand directly. I can go and buy those underlying assets. I can't buy Total, which I think sits in REMGRO, and a couple of other bits and pieces. Those are the bits you didn't mention, which are perhaps the attractive assets within that portfolio. Because you can, like in HCI, you can go and buy the underlying assets elsewhere, most of them. But are the unlisted assets attractive enough for you, Nick, to go into REMGRO?
No, and it's what's quite interesting is if you have a look and compare it to HCI, the underlying assets in HCI, so Sokosan, etc., are actually quite attractively priced at a low point in the cycle. They show a lot more value than some of the banking and insurance stocks.
You've had your turn on your own pick. Stop talking about that and talk about his.
That are in REMGRO. So this is a holding company that holds much more expensive assets, plus the discount in REMGRO sometimes goes out to sort of 18-20%, it's at 10%. So the discount is smaller and the underlying assets are expensive.
But that's the point to buy REMGRO. At the moment, that gap is about as narrow as I've ever seen it. 10%, that's a pretty narrow gap. You're not sort of getting any juicy bits and pieces in there, are you?
The reason why the gap has narrowed is they put a lot of their spare cash to work. So I think they had a big gap when they had a lot of spare cash because you don't want to pay a lot of value for cash. They've put that into Rainbow and Mediclinic specifically. They do have some attractive technology and media assets as well. The reason why I like REMGRO, it's one entry point for an investor into a diversified pool of high quality blue chip investments. It's really like
so. Are you saying that he's got an entry point into low quality sort of blue collar investments as opposed to blue chip investments?
I think the relative attractiveness of the REMGRO assets are more attractive.
But that's why you're paying such a big premium for them, and that's perhaps the problem from an investment perspective. Yes, very nice assets, great assets that you can get direct access to mostly, but you're paying the full price for them. HCI, however your argument is, they are great assets, but you're paying a discount because people don't have that same perception of the HCI assets as they do the
and investment returns are driven by the price paid as well. So,
do I hear a double barrel? Do I hear a pump action shotgun getting cocked over here?
Absolutely.
Kaboom! You've been shot down on that particular one. I like REMGRO. REMGRO is a great asset to have in a portfolio. Yes. Is it the right one to buy right now at a 10% discount? Perhaps that discount isn't attractive enough. Right, Nic-Norman Smith, your HCI pick was shot down in flames. You are either certifiably mad, incredibly courageous, or stupid. In 30 seconds, why Impala?
Impala Platinum, it's the second largest platinum producer in the world. It's got the highest quality set of assets probably available at the low end of the cost curve. We are a monopoly producer, so the fact that costs are rising in South Africa is not that important. That will get reflected in the price. It's a fantastic commodity. It's got a diversified spectrum of uses from automobiles to jewelry, investment, industrial uses, and it's trading at just above book value, so historically low valuation.
Okay, there we go, Impala Platinum, and that's why. So is he, I must remember my classifications, certifiable, brave or stupid? Or all of the above?
All of the above. It's an incredibly difficult space. I think the macro fundamental items outweigh the positives, unfortunately. So it is a good company. Very difficult labour situation in South Africa, extremely difficult. That's been well publicised. It's on everyone's lips at the moment. The fundamentals for the platinum price are not great, unfortunately. They're used mainly in automotive. Automotive demand not great at the moment, and there is the threat of replacement.
But isn't that what is priced into a share price, just above book value, trading below $100? It looks like a ripe and juicy peach. You want to go and pluck it off the branch and peel off that furry skin and devour it. That's what it feels like. But it felt like that at 150 rand a share as
Unfortunately, the price reflects those items, and whether those items will come right to those macro issues, I'm not sure. I think the platinum price, I don't see much upside for it. The dollar has strengthened and the platinum price hasn't really recovered.
Okay, respond to that, Nick, because I mean, he's making your arguments are completely valid in terms of the valuation, but there are lots of value investors who are looking a little bit glum at the moment. Valuation, you can't argue with. but you also can't argue with the reason why the valuation is so blooming attractive.
Look, if you think people are going to stop driving motor vehicles, wearing jewellery, and building and making flat screen televisions, then the market for platinum may be dead. But I don't think that's going to happen. I think it's the bottom of the cycle, and that cycle will turn. We're already seeing supply coming off, although our government is trying to push it a little bit. The smaller players are shutting down shafts and shutting down supply. And if you look at all the platinum reports, eventually, we will get into a deficit again, and that has to push. Economics 101 tells you it has to push the price up.
Strong argument, but not one that's going to convince him, I'm afraid, because ultimately this is not my call, it is your call, and you're blowing him out the water.
Yeah, I'm blowing this one out the
Okay, there we go. So Nic-Norman Smith, he's having a great run so far. HCI and Impala Platinum both being obliterated this evening, not getting any sort of leeway by Lance Williams from iCapital. Lance Williams himself has picked Standard Bank and REMGRO. Standard Bank is on Nic-Norman Smith's own buying list, so he likes it very much, but he hasn't got much patience for REMGRO. The discount to the valuation on REMGRO is just too small at about 10%. Keep watching as Share Shootout reaches its crescendo. 2 picks each so far from each of our guests. Each has one left to go in a moment. Nic-Norman Smith has made his stock pick. He's happy with Standard Bank. But for Lance Williams from iCapital, he's only got one option left, and he has to accept it. I wonder what that pick will be. You'll find out in just a moment.